Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 9th, 2016. This will be the first of probably break it down into two parts, to two videos, covering some long trade ideas that I'm watching right now. Some of these may become official trade ideas, and a quick side note that for those of you who are members to the site or those of you free trial members considering joining, I want you to know that I work for you, and the primary focus on the site, what I try to provide are actionable and timely trade ideas. Whether they're broad market trades on, the SPY and the QQQ, those broad market type ETFs, or individual stocks. Market analysis is a dime a dozen out there. Not that I don't think not that I don't put a value on mine, but what I think this site stands out for, especially when you go back for years and looking at all the trade ideas, is the performance of the trade ideas. And one of the things I try to do, and the reason I'm giving you these trade ideas now is just to get some of these out there. You can watch them. There are times where I have so many out there and they all start triggering that it's hard to get them all out on the site at one point before they break out, or even as they're breaking out. It can take several minutes. So I wanted to get these out in advance. You can watch these. Actually, a few of these are close to breaking out and again may make it on as trade ideas. But what I won't do, the reason the trade ideas have been by far the lightest they've been now for months on the site, and those that have been out there we've probably had the worst success rate that we've seen as far as trades completed by hitting their one or more profit targets versus those that are being stopped out. It's been just a very tough market. Again, at least to the way I see the charts and the way I trade. Everybody uses a different style. If you're a trend follower, and you went long, you certainly didn't go long right during the Brexit correction because that was a sell-off. It took, several days, if not weeks, depending on your trend indicators, for, this current uptrend to become apparent to all. It was very fast and sharp. So again, it's, everyone has their own trading style, and what I won't do at the risk of just trying to keep content flowing on the site is publish trade ideas, official trade ideas, just for the sake of putting them out there. If I don't see a lot, I don't see attractive risk-reward opportunities, attractive objective entries, then I'll keep the market analysis coming. I'll keep the unofficial trade ideas going, and there's been a lot of that in the trading room. There's been quite a few other traders doing, well. I know Shambo's done great on gold and GDX lately. Some great trades in there. Thank you for posting those. And as soon as the market becomes more conducive to trading, you'll see a flood of trade ideas, official trade ideas come on, and you'll probably see those come online, in relatively short order. Until then, let me go dive into the charts here, and I'll cut this one. Like I said, I'll cut this video, keep it relatively brief. And if you're looking for more long trade ideas, I'll follow up with a second video soon. This is oil. Now I'm starting out with this chart. I've shared this on the site quite a bit. Throughout the year, coming into 2015 or 2016, I should say, and beyond, I pointed this weekly chart out on WTIC. This is West Texas light crude oil, and you can see the years down here at the bottom. This is a very long-term chart, a weekly chart, and it just shows, I've remained throughout the year, longer-term bullish on crude. We've had long side trades. We've had short trades on the pullback. It's been a trader's market. And most recently, I made some comments. I was asked down here that while I haven't put it on any crude ideas as an official trade idea, there is a good chance that some will come online, and I'm going to go over quite a few in this video, and that's why I wanted to touch on oil first. I pointed out this potential inverse head and shoulders pattern you can see here with the left shoulder, head, right shoulder. And again, this formed throughout the better part of 2015. This is a very long-term chart going back 20 years in crude. So we zoom in, you can see this a little bit better on a WTIC chart, and that would look like the neckline there. And even if not, even if the head and shoulders doesn't play out, if let's say we go down a little more on the right shoulder here and take out symmetry of the pattern, we had the most powerful divergent low that I've seen in oil going, back over the last 20 years. Very, very strong bullish divergent low. Just about most of the trend indicators, nearly everything flipped to bullish on this rally. We've had a strong rally off the low. Will it prove to be a bear market rally? We'll only know in hindsight, but as of now, I think crude still looks good longer term, and I'll go over quite a few individual stocks that are in the energy sector, oil and gas sector. So we'll go ahead and start with this one, WFT, Weatherford International. Little work to do, and that's why, again, this is not an official trade idea yet. Let's go back to a 2-day period chart. If you see me click up here, 2-day period, that just gives me a range of 4 years on the chart. Every candlestick is now a 2-day, represents 2 days of price action. So you can see this is what I'm watching here. A couple things I'm watching on the chart, but among that is this long-term downtrend line. Let's extend that to the right so we can see where it comes in. So you can see the stock still has work to do, but there is a divergent low. This one has come down in this series of almost like a staircase, stepping down with these uptrend lines. And these are very powerful rallies. The stock has huge ranges. There's a 52% rally off the lows. This one is, about 60%, and I'm sure this one will do the same, 75%. So you can see that even the bear market rallies within a powerful bear market in this stock are well worth trading on the long side. And to go back to the daily chart, what do I see most recently? Well, we already had the most recent breakdown after this last uptrend, and prices may have probably bottomed here. Now we're in no man's land, what I like to call no man's land. We're between a very well-defined support and resistance. Your most important support is that previous reaction low there. We did have a divergent low, which we didn't have on a lot of these other bottoms here. So this tells me that this may be the bottom in WFT. And again, I started out with the chart of crude because all of these energy stocks, and when I'm talking the longer term outlook, and that's what I'm looking at here, a potential long-term swing trade or an investment, that largely hinges on what crude oil does. I think that goes without saying, but for those of you not familiar, if you look down here and it gives you a description of the company, if I don't mention it, it says oil and gas, and crude is going back down and it's going to take out the 2015 lows, let's say, then this stock is not going to break, more than likely will not go above this downtrend line and run off to the races anytime soon to any or all these, horizontal resistance levels and targets. But, should crude firm up and, continue to rise in the coming years, a year, 2 years out, very possible this stock goes from $5.50 up here to, the $15 area, especially when you go back longer term and see how much it's come down from. Remember, this was, a $25 stock just a couple years ago. All right, so that's WFT, DLNG. Sort of related, this one, I believe, ships liquid natural gas, so really not an oil stock. And a lot of these shippers, especially those that transport things like natural gas, they're dependent not so much on the price of natural gas, although that will help if there's more volume flowing, but they're paid to transport the gas. So if they're not a gas producer, they're not as subject to the changes in the price of natural gas, just how much gas is being used and shipped in the economy around the world. So there's one, and nice dividend. If you look at this, I think you can make it out here in the upper right-hand corner. That's almost a 12% yield. I may have mentioned this one in the past. We might even have traded this one. I know I've traded a few of these natural gas shippers, but if you take a look here, this line's at 519, call it 520. You can see some reactions there, quite a few reactions back here. This was resistance, that line at that point, and probably really draw a resistance zone, support resistance zone. You can see support back here, resistance here, kind of punched through. So it's really struggling with this area. It's sort of a large range, if you will, right here. And I did note here as well, if it takes out the top of that range, and this is my concern, and this is the reason this trade is not an official long at this time, meant to go to the 2-day period chart, you can see a fairly well-defined downtrend line that's going to come in just above. So when I'm trading, if a stock has a resistance level at this one around 520 that I'm watching, but then just above that, let's say it takes a few weeks or a couple more months of sideways action, then it breaks out, or even if it broke out today, the upside until it hits that trend line is limited. So therefore, you'll likely see this one as an official trade idea if and when I would love to see it consolidate a little more build up the energy and have this trend line come in with this horizontal resistance. Those are my ideal setups, intersecting resistance levels in a stock that has, consolidated and worked off these overbought conditions. It had a heck of a run up from the bottom. That was 130% gain. So this is healthy price action. This is absorbing that run up at resistance, and longer term, this would be a great one if it broke out. And I won't even give price targets now, but I can tell you that if it broke out of there, you'd be looking for at least a move up to that $21 area, and that's pretty nice move from the $15, $16 area. That's DLNG. Next one, another energy stock, Noble Energy. This one looks like it made a divergent low here. We have a double bottom low back in early 2016, January and February. We had several reactions here, and more recently we tested those lows. They've held so far, and you have bullish divergence in place. You can see the MACD looks like it's starting to curl up here. The RSI's made a higher low, and you can draw this wedge type pattern right here below there. So this really, you've got some work to do, and again, this is the reason why this one's not an active or an official trade idea now, because if it breaks above this bullish falling wedge, it has significant resistance here around the $8 level. It says 797 where I have that line. You'd see numerous reactions there. That was a key support shelf which broke, and there were even reactions from underneath here. So now that level has to be taken out. So the safe bet on this one is to wait for not only a break of that wedge, maybe you get a break, you hit that $8 area, you come back and back test, and maybe the stock needs to base a little more before it breaks out. But ultimately, I can tell you this would be a solid break above the $8 level, would be very bullish, and likely take it up to at least here in the beginning. This would be my first target, 880-ish. Doesn't sound like a lot, 30 cents, but a 30-cent move on an $8 stock is a significant move. That's about, let's see, 9% or so. And then if it comes up here, the next resistance is around the 960 area. That's about a 19% gain. Then you have the downtrend line come into play. And, a lot of these stocks, you'll see a common theme as I go over the energy stocks. You'll see these downtrend lines. These are the bear market downtrend lines. When you start seeing not one, but most of these taking out those downtrend lines, it will almost certainly be in sympathy with crude prices rising, but that will almost very likely tell us the bear market in the energy sector is over. And until and unless these downtrend lines, these primary downtrend lines are taken out, again, Noble goes all the way back here. The stock has been falling before that, but this is where I'm drawing that downtrend line. We have a few reactions there. And so work to be done, but even within a bear market, even if we're just trading a bear market rally and the stock goes from 724 up to that trend line, that's almost 50% right there. So let's see what's next. CF. This is an ag stock. I mentioned this one as I put it as a setup the other day, but in front of earnings. For those of you that didn't watch the post, the earnings were disappointing in the guidance, so the stock fell down, and that's why I haven't added it yet. But I do like. I've been watching it. I'm watching this along with Mosaic and Potash and some of the other fertilizer stocks. And there's actually a couple more I'll cover here today. And I do like the sector. I'm pretty bullish on the fertilizer stocks longer term. They've been in a pretty vicious bear market, but it appears to me that the bottom may be close, if not already in place. Remember it's always darkest just before the dawn. So when you're reading things about, the depressed nitrogen prices and other fertilizer prices and overcapacity in the industry and things like that, then that's usually about the time where the worst of it's priced into the stocks. And if you wait to start hearing about a recovery in nitrogen and other fertilizers, and the demand shortages in the industry and all that good stuff, then these stocks are already going to be up 50% by then. I can almost assure you that. So you want to buy, like I said, when the charts tell you to buy, because they'll certainly reflect a turn in the industry before the fundamentals, or at least the headlines that you and I read in the papers will. All right, so there's CF back within the daily rising wedge I talked about. Still has the bullish divergences in place. They've not been burned through. I mentioned on this one a weekly chart. This is long-term support, the support zone right here. So it held that weekly support, kind of hammered down off the bottom of it there last week during the bad news, and it has regained back inside. This is that larger wedge just shown on a weekly time frame, and bullish divergence in place on the weekly as well. So this one has a lot of potential as a long-term swing trade and a nice dividend yield of about 5.43%, which at least as of the other day, I believe that dividend is still intact. All right, DSX. Diana Shipping. Diana Shipping, I pointed out back here earlier in the year, had this range here where it was basing, and it broke above that range. It's actually done so several times. It had a breakout, ran up to this level here. These stocks trade off the technicals as well. It's a low price shipping stock, so keep in mind a lot of risk involved. You have to adjust your position sizes because these shippers can swing up double digits in a day. I've seen it many times. I've traded these for years. So very aggressive, but a potential bottoming play. Again, you had this divergent low right here, back here. It's popped through this basing pattern a few times, but it's back into there now. So you can see that's how this stock has been acting. In other words, the bottom of this area right here around 216, 215, that's support, with about 280 at the top of that range. And then you have another range right up here that the stock has been bouncing in. So the way you can trade these range-bound stocks is you can short at the top of the range. I wouldn't be shorting the shipper here, not a low-price shipping stock. You can get cooked on good news or anything like that. I'd be more apt to go long. So you go long at the bottom of the range with a stop below, or you go long on a breakout, preferably on above average volume, and you try to trade it up to the top of the range. And then ultimately this may be one large basing pattern, and this stock may take off, but the shipping industry has definitely had its woes in recent years. So a higher risk play there on DSX. Let's see, CVSI. This is sort of an eclectic mix, too, of names. I didn't go through sectors. I just went through various watch lists that I've been building. So here's one. What I'm watching more recently is this downtrend line. Pretty well defined. Prices are really compressing. It's a biotech stock, I believe, so you can, and it's low price, 35 cents. So uber aggressive, high risk. Adjust your position size down by at least a quarter, if not more, from what you might normally take. This is a penny stock, but so you're right at support. Now, two ways to do it. The safer play, the more conventional way, is to wait for a break above this trend line. You can replicate that. Just use a log scaling on your chart. If you don't use a log scaling, you'll get a different picture of the stock. So you wait for a break out of that line, and that would be, you know what, I'd add another target before there. I'd definitely see resistance right here. That would be the first target around 54. Set your stop, your sell limit order a little bit below that, or you can let it ride. Try to go up to the next target there, and if it breaks that support, this is a descending triangle pattern. The next support's all the way down here to 24 cents or so. Too far to really run a stop on that. It wouldn't offer an objective risk reward. And you may want to look into the company. It may be a small biotech with just one or two drugs in the pipeline, and so if they shoot down whatever it's working on, again, I don't know anything about it fundamentally. I'm just pointing out the chart. WLL, Whiting Petroleum Corp, another oil and gas, E&P. There's a downtrend line to watch. This one has support here at 660, resistance at 812. As you can see, it's kind of moving between these levels. So, solid break above 812, or to be safe, there's a recent reaction high just above that. If I capture it here, the high is 825. You might want to wait for it to take out that previous reaction high. If so, the stock can probably run back up to 980 and ultimately this downtrend line. And like everything else, when that downtrend line goes, might have to go to a weekly chart, draw a different downtrend line off the highs. That one's a little sloppy, slice through, but that might be the downtrend line to watch. So I won't focus too much on it. Not one of my favorites, but there's some levels. It seems to trade well around those levels. Here's GoPro, GPRO. GoPro looks pretty good. It has this basing pattern here. Let's see. Draw this in, give you a shaded box, and you can pretty much see the stock has been basing now for throughout the year, actually, since the beginning of the year. and there was a big gap down that kicked off this whole basing pattern range, came back up. You can see, let me move this away. Okay, came back up. There's the gap. So what I have here is a resistance zone. I have the white line, which is really the most important, significant level. But there is a reaction high there and the top of the gap. No, that the white line is at the top of the gap, but we have that reaction high. So I put that line there. Now, what I would have expected, and it hasn't happened, when we took out this white line at 1433, which is around the top of that gap there, and it's also what capped these advances, and even this one where we have that candlestick pierced through there. You see the candlestick wick, but we closed back below it. So this was a key resistance level, but what happened is we took it out the other day. Actually, we failed on an intraday basis, fell back below it. Today we're above it once again, but the volume isn't there, and that's why I wouldn't chase this one at this point or take it. I would wait to see volume come into the stock, and now wait for it to take out this previous reaction high, which is around 1493. If and when that goes, especially on volume, this one can run. Targets would be certainly around right here, 1780, and up around the top of that area, 2055, give or take, and set your stops a little below. So there's Gopro again, looking like it's forming in a base, and if it falls back in this basing pattern, keep an eye on it, and maybe it'll break out later, or maybe it'll break to the downside. Who knows? That's why a trade setup is only a trade setup until triggered. NM, Navios Maritime Holdings, shipping. Looks like another shipping stock. We had a downtrend line here that we sliced through a few times, so I added this new yellow downtrend line, and you can see quite a few reactions. That yellow downtrend line also comes in with horizontal resistance around 114, and it's right there pushing at it. So we put in a divergent low recently, and if it punches above 114 and this yellow downtrend line, these shippers are very whippy. They move around a lot intraday, so you might want to wait for a solid close above, or at least high volume, at least 1.5 times the above average volume coming into the stock if you take it intraday. And even if you do take it on a daily close, you do want to wait to see if it closes that day on above average volume. If it's just average, or especially below average volume, I'd probably stay away from it. Probably prove to be a false breakout. Levels on this one, these are old levels from old trade targets that I had. I haven't updated this chart. There's certainly a level right here at 127. And then if it takes out that downtrend, it should look good up to that 172 area. I have the horizontal resistance line at 175, but that former target was at 172, set a little bit below there. Okay, I'll wrap this one up here. As I said, I'll break this down into two parts. I did cover about half of the longs that I wanted to cover today, and I have a comparable list of short trade ideas, and I'll also do that in video format. And as always, as I said, any that really stand out and look to be high probability trades, I will go ahead and add those as official trade ideas. But until then, I wanted to get these out for you guys to look at, replicate these trend lines and these levels on your charts. And as always, if you have any questions, just shoot me a line in the trading room, and I'll be glad to post an updated static chart, or give you my thoughts on any of these. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.